Hello, everyone. Welcome back to the Entrepreneur Investor Connection. As you know, my name is Miguel Sanchez, your host, and I help people, entrepreneurs and investors mostly, understand how to invest more in innovation. And today, my special guest is James. Got how to say your last name?
Regulinski.
All right. I'm always bad with the last names, but that's gonna be a running clip I do one day. So today I'm here with James, and he has a very interesting company that revolves around investing in stock. So as I start the show, whenever I have an interview, I always talk about how we met. So James went to the College of Olin College of Engineering, and Meta Bronx has a partnership with Olin College of Engineering, and Elias, one of our esteemed graduates, put us in touch. And he said, we have a lot of young people this semester that are looking at stock. Why don't we speak to James about his company? So how I always started is, James, tell the audience your superhero origin story. Where'd you come from? What made you get into what you got into, and then what are you working on now?
Yeah. I think probably the most interesting part, I grew up all over the place, but in particular, when I was about 10 years old, my parents moved us, the whole family, onto a sailboat. And we spent the next 5 or so years sailing around the world. And that kind of like broke up any sense of importance or self-importance I had, and kind of put my own life into perspective of both like the greater social context, but also, when you're a 13-year-old getting pounded by 30-foot waves, you're kind of like, okay, Mother Nature, that's a pretty important big part of the world, and you're not a lot in the face of that. So um, that was the context that. I mean, also, I was doing a lot of hands-on work on the boat. I was fixing the engine work on it. And that
Amazing.
got me, yeah, no, not fun. Not fun, but necessary. And it turns out there's a lot of things that are not fun, but necessary in the world. And that, I think, sort of set the stage for when I eventually came back to the US, um, got into Olin College of Engineering. There was a professor there named Ben Linder, and he sort of changed my outlook on what engineering could be and how you could use it in the face of the world. In particular, reminding us or teaching us that engineering wasn't just about making cool gadgets, that you had to build an ethical framework, because without that ethical framework, your skills, your tools at changing the world and making it whatever it was just going to be in the hands of someone else. You were going to be de facto following their ethics. So if you go work for Facebook, you're de facto following the ethics of Mark Zuckerberg, unless you choose to fight it. And you have to have a strong sense of what your purpose is and what kind of world you want to build. Otherwise, you're going to get swept up in whatever ethos you get caught up in. So
That's
he was,
interesting. That's
yeah,
pretty interesting.
he was a big influence on what got me involved in sort of exploring more equitable, sustainable solutions. At Olin, I took a semester off and went to Ghana, lived there for 6 months, and worked on a waste to energy project. Again, a little bit of hubris there, very much the white American going to another place to fix the problems. And mostly what I learned was I didn't know that much. The problems weren't necessarily just technical problems. And you couldn't technically solve your way into those. And since then, I've kind of been relearning that again, which is a lot of the problems around sustainability, around how we engage with the world and how we build solutions for the ecological problems that we'll be facing are not just technical. And we have a lot of the technical solutions. I like to think of them as collective will problems now. And I kind of came upon the framework I have is like there are three ways that you solve a collective will problem. One is through politics, one is through religion, and one is through finance. I don't even know if this is here. And those are the ways that we express collective will in our society. There probably are more. I'm probably missing some. But given that that's what I was able to identify, I saw finance as a place where I could make a difference. I could use the skills I had working in startup space, working from a technical background, and help maybe funnel some more of the world's capital into solving some of our biggest problems instead of just into enriching our wealthiest individuals. So
That led you to Carbon Collective. Like you were entrepreneurial early, right after college and dealing with this Ghana project?
Yeah, so I did that project. I came back. I worked for a company that was building gasifiers that turned agricultural waste into electricity in little like small generator. And the idea was you could get a baseline power for a microgrid using agricultural waste. Did that for a few years, then worked on sort of high efficiency transition energy systems. And after that, so I was an employee on both of those. And then with my friend, who's my current co-founder, we started our previous company. That was our own attempt at doing a venture-backed startup, which is a lot of times when people think of a startup, they think of venture-backed startups. But I do want to point out that that's a very particular type of funding and a very particular way of being
Creating a business. Yes,
yeah.
for sure.
So if there are entrepreneurial people out there, like, look at your options. Venture might be the right path for you, but there are other paths. Anyway, so met my best friend one of my closest friends since we were 4, and I teamed up and started working on this project to build low-cost sensors for shrimp farms. And the idea was if you could get enough sensing in shrimp farms, you could reduce the amount of feed they were using. You could decrease the amount of sudden deaths, so catastrophic collapse of farms, and decrease the number of shrimp overall that died, making it more efficient, making less waste.
So you're sensing the water.
What
are you sensing in the water quality? Water quality.
Dissolved oxygen, nitrates, pH, temperature, and the venture pitch was if you can get enough of this data, you can start modeling out and predicting what's going to happen and help reduce the loss.
That makes a lot of sense, actually. That's pretty good. How did that go?
It went well from the business, there were a lot of interest. We had a lot of farms that were excited to work with us. Ultimately, the technological path we took, we promised a sensor that would be so cheap you could put one in every pond.
Okay.
The technology path that we thought would get us there didn't get us there, or we were not the right team to get it to that point.
Was it that the tools didn't exist yet, or they needed to be smaller? Was it something like that, or was it just you couldn't figure it out?
I think the key problem is you need the data to be consistent from pond to pond, and sensors you have to calibrate. In the lab setting, you always keep them calibrated. And our idea was that we could kind of auto calibrate in the field, and that there'd be these cartridges that you replace every month. And when you replaced it, the sensor would get the information from the factory about this chemistry, and it would be able to update its calibration and thus would give you an accurate reading. And you wouldn't need a lot of expert skill to do this, because if you have hundreds of sensors in a farm and you're relying on lots of PhD level folks who can go or highly trained individuals who can go in there and recalibrate all the sensors, it's going to be really expensive.
Got it.
And so we never got that self-calibration consistency problem solved.
So how'd that lead you into Carbon Collective? It's super interesting always to find the entrepreneurial journey, right? Like, these things don't sound anything like your current startup, right? Mm-hmm. So how'd you get there?
I mean, the through line in all of this is we need to rethink how we engage with the natural world, because we rely on it, and currently we're destroying that life support system.
Okay.
So if it's energy, if it's food systems, we can't fight. It's like being back in the ocean. You can't fight the ocean. You can sail the ocean, you can surf a wave, you can enjoy the calms, but you won't win in a fight. And I like to think of every engineered system has the opportunity to engage with natural systems in a more intelligent way. And I think that is just as true of ideas when you get into the world of capital as it is of an engine or an agricultural system.
Okay.
But in particular, one of the things I learned is to make a startup work, you have to have a really good team. You have to be able to communicate well with your team. Like, you have to be able to want to get up every day and keep tackling
problem.
Remember I was saying that like the world is kind of like fixing toilets. Like, there's a lot of shit we don't want to do, but has to be done.
Yeah.
The startup's the same way. Like, most of what you do is not glamorous.
Entrepreneurship in general, right? But startups specifically, because you have to solve a problem with a certain speed because of the type of investment you've
Oh
accepted,
yeah.
right?
Yeah. You're constantly like, can you get to exponential growth? If you can do linear growth, great business. And VCs are going to yawn. Like,
Yes, exactly. Exactly. That's what you said earlier. I talk about a lot because
mhm,
the way you take money is the way you're gonna have to continue taking money, and it
mhm,
also we at MetaBronx we've worked with startups that have raised venture capital, and it has taken them into a path that did not do well for their business. They had to move in a speed that was not good for their business. They were doing well, but
mhm.
because the speed wasn't to the speed of the VCs, they died.
Absolutely.
Yeah, yeah, yeah.
And the thing is, the VC is they're investing in a ton of companies. They don't care
Exactly.
if your particular company fails. If it's like they're going to
Exactly.
push you through the ringer and see if you come out the other side in the type of company they want.
Exactly.
And there's,
Exactly.
that's you just have to go in knowing that that's what they're after. And
100%. 100%.
I right now think with the climate crisis, we need solutions that are going at that speed.
That's
And
true.
so,
That makes a lot of sense. The speed that we put ourselves that we need to
mhm,
solve this problem, venture may actually make a lot of sense. One thing I really like is equity crowdfunding because it
mm,
allows the normal person to invest
yeah,
in these ideas. One of the big things I see about the VC model is the rich just get richer, right? Like because only the one percenters are the ones that can get in on these deals. When they do hit, they just get richer, and the normal person can't be in those deals. So that's where, I would love to see some type of balance where even venture backed companies give some type of opportunity to the normal person if they want to try and be, of course it's risky. The earlier you
mhm,
invest in anything is the riskier. And these VCs, they invest, like you said, in a bunch of companies because they only need a few to win.
right.
The regular person, if they give money to a company, they kind of need it to do well. you know?
And
So there's that too.
this is so I learned a lot in being working on Carbon Collective, and one of the things that really along those lines that really frustrated me, and I think it's getting at the heart of one of the problems around capital and its current structure, is the SEC and stated a bunch of laws around individuals, non-accredited investors, what we're calling retail
Yep.
investors, you and me,
Yep.
saying that we want to protect them from unscrupulous individuals.
Yes.
So that meant that literally until you pass all this paperwork hurdle, which is what going public is
Yep.
reporting, paperwork. You're pretty much saying like we are a
Background
reputable
checks.
company.
Yep. 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 All kinds
Exactly,
of stuff.
exactly. And until you pass that, we're going to protect the average investor from you. Well, the flip side of that is that a lot of the largest growth, a lot of the greatest innovation, you can't get in on the ground floor because you're not an accredited investor.
100%.
So then in a pushback in this, I think it was in 2015, there was the crowdfunding
Yeah,
provision.
2012. 2012.
2012.
It started, but I think it went into, around that time. Yeah.
Yeah. Okay. So then you started being able to, as an individual, invest in individual companies. But this is also one of the highest risk areas for a
Yeah.
individual because you have to go now research one particular company. Whereas if you want to invest in a index strategy, which is mostly what Carbon Collective focuses on to give you broad diversification, we say we don't want to pick winners. We want you to be in a sector, in a space that is going to win. We want you, for our core portfolio, it's the broad market. And then for our climate index, it's all the companies that are building drawdown solutions. So we base this off of Project Drawdown, which is a massive model of what it takes to get us to be pulling more CO2 out of the atmosphere than releasing. And then we identified all the companies that were building technologies in that space. So that gives you broad diversification, right?
Sure.
And there's not an equivalent for a retail investor who's like, I want to invest in clean energy private companies, or I want to invest in natural capital.
That's actually a great idea. You should start it.
Well, I've been throwing this idea around, getting people's reactions, because I think that's one of the directions that we're going to go in Carbon Collective is giving retail investors the option to help shorten the funding. There's a massive funding gap. About $1 trillion extra dollars need to be going into climate solutions.
Yes.
And I think retail
And
investors,
of course, most companies that go equity crowdfunding probably will fail because even ones that get venture backed will fail. So for you to be kind of like due diligence kind of like whole, like, because if a normal person doesn't know what you guys know, they can be sure that you've done more research than they can. So by investing in what you've figured out, they have a better shot, right?
Right. In addition, if you have $1,000 to invest, you've been working hard, maybe you're just out of college, you have your first job, you've diligently gotten your first grand that you want to invest. That might even sound like a lot to some of you guys right now,
Sure.
but and you're ready to put that into the market. You put it into one company, and it turns out that CEO was actually a flake. He was good at telling a story, but he like didn't know how to run a company, and that goes under. So you've lost everything. But if you could invest it in 100 companies,
Yes. Yes.
then in the same way that when venture invests in 100 companies, they only need one to return the whole fund.
Exactly. Exactly. And that's the game, right? Again, to be able to invest, one, there's the due diligence, which is a lot of work. They have armies of people
Yeah.
to just even put in a small check into any company, but then they can also, through volume, put
Mm-hmm.
checks into many companies. And then one turns into Coinbase, they're okay,
Yeah,
And
exactly.
99 just fail because, again, they push the speed sometimes to the detriment. I do think there's a middle ground where if a company turns out to make $100 million a year, that's okay if it's not worth 10 billion. So sometimes part of what I want to see is this middle area where it's okay to just be a okay company, not be a rocket ship. So
So
that's another
this
thing.
comes back to like why I think retail investing has an interesting niche or opportunity, if you can get them paired into private capital, because there's a lot of companies that need to exist in the world, or that will be good businesses in the world, as you pointed out, and
Mm-hmm.
they're not going to be a unicorn. I mean, unicorn is like $1 billion company,
$1 billion company, yeah.
right? And it's like, okay, but a company that protects a watershed and is able to monetize that so that all the companies that use that resource are paying back into restoring it, like, really cool business model, might even make a fair amount of money, is not going to be $1 billion company.
Exactly. And the community around that may make sense for them to invest in that and then reap some reward. It may not
Right.
make Amazon level money, but you benefit from helping your own community, right?
Mm-hmm.
That to
Mm-hmm.
me is one of the game changing innovations. And sustainability, like you said, there's a big funding gap. But even I saw your website, and everybody should go check out carboncollective.co. How do you do it with the current already public companies? Because I did see that
Yeah.
you do find the ones that are already public, and then you also have a bigger return because they're doing sustainable things. So can you explain that to us?
Yeah. So the first thing I have to say, regulated industry, I'm going to say this every time. Our past performance does not guarantee that there'll be future
Sure.
success.
And none of this is financial advice.
Yeah.
Good
I'm going to
sense,
do,
Lauren.
but none of this is financial advice. However, I will talk a bit about my own beliefs and how I see this portfolio playing into it. So there's a couple strategies that are worth talking about here. I mentioned it earlier with the core portfolio and the climate index in particular. So the underlying observation that we saw around broadly investing in the market. So there's something called we would call it index-based investing, or in modern portfolio theory, it says like invest in broadly across the market, in industries that are poorly correlated. So no matter what the market's doing, you gain some money. This is like get rich slowly.
Sure.
You rely on the power of compound interest and steady but modest returns every year, and you win out. However, there are industries that, from an ecological perspective, that we didn't want to be involved in, mostly fossil fuel industries.
Sure.
And so one observation we had is that if you break up the stock market into sectors, 4 of the 11 sectors produce 85% of the carbon emissions.
Whoa. Wow.
They represent less than 20% of the stock market. Of all the publicly traded companies in the US, they represent less than 20%, and they're responsible for 85% of the carbon emissions.
Whoa.
Okay, now carbon emissions is not everything that we care about, but we're using that as one of the most important things we care about and as a good indicator. So we can get you an index-based approach, which has really low fees. And low fees are important because in that compounding game, the fees cut away at how much you have.
I saw that. Actually, this is interesting because I read a book by Tony Robbins where he said if you have a 1% fee from your management team, whoever's managing your 401k, 1 or 2%, I forgot the actual number. He said you end up with half of the money you are supposed to have when you retire off a 1% per year fee. So the fees are very important.
Absolutely. Look at the fees, and not just the fees of the management company, but if they're using index funds. So like when you go to Betterment, it's not just their management fee. It's also the fee of the funds they're using, because you don't see that as a fee. It won't say minus, $100 for using this fund. But its performance will be lower than its target index if it's an index-based fund, or whatever it could be, because those fees are coming out. They're coming out of the dividends. They're coming out of the gains. So ETFs, which if you haven't heard of ETF, it's like a fancy way of collecting a whole bunch of stocks under one ticker. They generally have some philosophy. A lot of them are tracking either sectors or the whole market, like the S&P 500, et cetera. However, you can get, if you look at the combination of the management fees and the fund fees, you want to get those as low as possible, because as you said, that could end up being half of your wealth.
Yeah. That was shocking to me. Like, of course, everybody has a 401k if you have a regular job. Even if you're an entrepreneur, you pay into a 401k. But not understanding it is costing you so much money. So if you can start grabbing your own future and understanding this stuff and starting to at least try to manage more of it, you will end up with a lot more money. But what I liked about what you and your website was showing is being involved in the innovation of sustainability has also some very high upside potential, and you're already starting to see it, and we're not even there yet, right? Like everything is just starting.
So if you look at the world in which we solve climate change and the technology, the change in our economy that has to happen, you could say, be terrified and be like, how the hell are we going to, I don't know if I can swear, how in the world are we going to solve get all of this technology out there in a time frame that's going to make a difference? The other thing you could look at and say is, we are going to do this. And if we don't, we probably don't have to worry about stock market anymore. So we're going to do this, which means there is a massive opportunity. If we're going to 10x the solar industry and the wind industry, if every vehicle on the road is going to switch out for an electric vehicle, then Tesla is undervalued right now at its way crazy inflation. If that is truly what's going to happen, is that each of these companies is going to start producing a ton more of what they're producing, then the market, you really want to be more exposed to all the companies that are involved in this transition. Yes. And now it's a bit of a guessing game. What are those companies? But that's why we used what some of the leading thinkers were. So the drawdown was sort of, that project was sort of organized by Paul Hawkins. He's I think he was originally at the Rocky Mountain Institute, sort of think tank around sustainability, brought a ton of scientists together and been like, look, in your space, what are the climate solutions? How much of the solution can this be? And that's what we based the climate index on. So that's, as I said,
explain the climate index then to us, because I know, like you said, there's a group of stocks that you pull together, and anyone that invests in through Carbon Collective, do you choose how many are you involved in, or do you just say, I'm just selecting what you guys have found?
Yeah, right now it's not a la carte. We have a fixed menu. Okay. And it is, when you sign up with Carbon Collective, you either are getting the low carbon economy, which is those 9 remaining maths are hard. Those 7 remaining sectors.
Okay.
And the climate index balanced against bonds. So that's one option. We call that our core portfolio. Or you can say, I just want to be invested in the climate index. I get that that's riskier. Just going to do the climate index and green bonds to help mitigate that risk a little bit.
Got it.
the climate index we update yearly. It's going to be somewhat participatory. Like folks are going to be able to recommend that companies be looked at to be considered for the climate index. We publish all of our rules for like how we decide on companies, so that I think the financial industry gets a lot of its prestige from being secretive. Like,
Yeah,
like
yeah,
oh,
yeah.
it's all proprietary.
Insider information, kind of. Yeah.
Exactly. And so we don't want to be in that space. Like we want to have people know, be comfortable, be excited about the world that we're working towards. And so that means sharing with folks why a company is in the climate index and what were the criteria, and if it starts failing at those criteria, when it will be cut. So that's the current thinking around it. We sort of understand the spaces we need to be invested in. We find all the companies that exist. We test. So some of the criteria, for example, if you're a power companies are hard. Power companies, often, even the best, there are very few that don't have any fossil fuel burning involved. But there are some that are making incredible commitments. And those commitments include above government mandates reduction in carbon emissions. They're actively, there's like some companies that are buying up other power producers, and then so they'll get coal plants, and then they're retiring those coal plants. So it's like
So they're like eliminating.
Yeah,
they're eliminating some of the waste.
Exactly. They have capital right now. This is in their industry. They can make a difference in doing that. But if they're making more than half of their revenue from non-drawdown solutions, so not in the core industry or the core thing that we're including them for. So one of the overall sectors is like sorry, I'm a little all over the place. One of the sectors in the climate index is closed loop economy.
Okay. What's that?
Closed loop economy is, look, right now we're in a world where everything, you make it from virgin material and then you throw it away and it's in the dumpster. Well, that means all of the embedded energy in making that is now in the dump. And so you not only have a trash problem, you have a bunch of wasted energy, and then, chemicals leach off from that. There's a problem there. Methane is often created in landfills that is 10 times more. I need to check that number. It is of the order of 10 times more impactful than carbon dioxide. So there's just these knock-on effects of that kind of profligate waste that we want to put curb. So companies that are working on reusing those materials, so we don't have to get what we call virgin materials, are part of the closed loop economy. But if you're a company that does 10%, we build machines that help with recycling, but the 90% we're doing something completely different. They're not going to make it into the climate index because they're not going to disproportionately benefit as we make this transition to using less energy, to producing less waste that we imagine is going to be happening over the next 30 years.
So again, if there's any questions as we talk, definitely put them in the chat. But so what advice would you give a new investor? Let's say today they haven't invested in stocks. They're looking at Carbon Collective, but they're also trying to understand, like someone just asked, what about Fidelity? Like how are you different than Fidelity, right now? Because literally somebody just asked.
Great. So Fidelity they're a number of things. They're a brokerage, they're a clearing house. I think they have an investment advisory arm. So they're a large conglomerate and do a bunch of things. They also have a number of funds. You can buy a Fidelity index fund.
Okay.
An ETF.
They have their own ETFs. Got it.
Their own ETFs. You can get an advisor. You can get your 401. They'll coordinate and manage your 401ks. So they're a all-in-one financial superpower, let's say. We are just an investment advisor, which means that we currently don't have an ETF of our own. We don't clear our stocks. Like we don't go onto the floor and make trades. That's all being done by our custodian and our brokerage. So Fidelity doesn't have their business model is we deal in financial services. We help you with financial services. And a company that's focused on that might give you a really low price and might give you tools that you don't have elsewhere. They give you opportunities that access to resources you don't have elsewhere. But they're not going to help you make a decision about
what types of companies at all.
They might have an advisory service.
Oh, I see.
It's not their core business. So when I look at Fidelity's sustainable ETFs, I don't see any their ESG sort of it's confusing why it's even an ESG. It seems like it cuts out some bad actors.
What's ESG stand for?
Yeah. So ESG is the big buzzword around sort of sustainable investing. It means environment, social, and governance. And it is a single value score that you get. And it is the combination of your scores on all three of those. It's all proprietary data. It's owned by like these individual research companies. And these large firms like Vanguard and Fidelity buy this data, then they sort their holdings in a fund they want to make ESG, and then they have some filter where we cut out everyone who's below a certain score. But you end up with weird anomalies. So it's like because of the self-reporting by the companies, they'll get a strong ESG score, and
they know how to game the system, so they get above whatever.
They game the system. They are really good in governance, but really awful in environments. You get ExxonMobil on some of these ESG funds, and you're like, wait a second, how is this?
That's crazy. Yeah, because that makes sense. That's why you do need some type of watchdog. Like you need to be able to say, do you only focus on certain level market caps, or do you do low market caps as well? How do you?
Yeah, for our climate index, we don't have any cutoff for the market cap, but it is weighted. There is a band, like if a company has a larger market cap, it's going to make up a bigger percentage of the climate index.
Because they're more proven, right? They're a more proven company at that point.
Essentially.
So we actually have a Meta Bronx student, apprentice, that wants to ask a question. All right, I'm going to bring on screen.
Absolutely.
You're on mute.
Hi, I just wanted to ask the question about what does Carbo Collective focus on when it comes onto investing?
What do we focus on?
Yeah.
So like what is the theme or?
Yeah, the theme, like what are you guys focusing on when it comes to investing? What is your goal?
Yeah, so our goal is to reduce the environmental impact that your portfolio has. So we're investing in a world in where we solve climate change. And for us, that means that we're investing in low carbon companies that don't emit a lot of CO2. And we invest in the companies that are building the world in which we solve climate change. So for us, that means fully electrified. These are renewable, zero carbon energy production. So solar, geothermal, wind. This is electric vehicles, and hydrogen vehicles, so transitioning away from fossil fuels for transportation. This is the closed loop economy, which I was talking about before. So recycling, reducing everything from refrigerants to batteries need to be when they're reused, it produces less waste, has a lower impact on the environment, on our communities, on the sort of CO2 emitted. And let's see, did I miss any? We also on helping the sort of the transition to telepresence, so needing to fly less and move around less. So technologies that help us do that, because
travel is.
Hey, I think everyone should travel for pleasure, to learn about the world, to meet other people, because when you meet other people, you don't think that your way of thinking is the only way of thinking that matters. However, a lot of business travel is, let's fly these execs to an airport. They meet in a conference room in an airport in another place, and then they fly back. And you're like, was that really necessary, guys?
Sometimes in a private jet, right?
Yeah, exactly. So if you can cut that out, it's good. So those are our sort of investment themes: low carbon economy, and then these companies that are helping a transition to a world that produces less waste, produces more clean energy.
That makes a lot of sense. Any other question, Mika?
Yes. Um, yeah, like what does like do you guys make the campaigns to spread around awareness of the issue?
So, right, I mean, we're pretty new, and there's our aspirations, and there's what we've actually
There's a
accomplished,
budget.
and there's a budget. So,
Yeah.
as I said earlier, we try to publish everything, all of our decision making process, so that people can follow along and do it themselves. Like, if your guys like, hey, your management fees are too high for us, we want to learn, we want to do it ourselves. You can still go to our website and see our entire portfolio. You can get every ticker there. You can even get a lot of the rationale behind why we chose things. You can recreate all of this. We do some additional things like rebalancing, which is
Sure.
every year you rearrange where your money is so that it sort of meets the target balance, and that has some benefits. But you can even do that yourself if you want to take the time. So as far as education goes, we try to teach what we do. And then as far as awareness, we just started our social media pages. We're behind the curve there, but we're trying to bring awareness to tangential spaces. So like, as I said before, the ways we express collective action also includes politics. So we can't be, we haven't fully found our voice in the political space, but we can't avoid politics. And other companies that are doing exciting things in the space, we try to lift their voice as well. So
How has the Green New Deal idea affected your business? Like, is it something where if it goes into place and how it goes into place, you have different companies that will join your list, or how would that work?
um, honestly, if the Green New Deal went into place, I think my hunch is our portfolio would do well, because the companies that would win in that scenario would be doing better, be getting funding, are already represented.
Okay. Okay.
They should be. That's our goal in doing all of this. So I think that would be the major way it would affect it. If other ones joined it, they would have had to have made a decision as a result of the Green New Deal that they were going to participate more in climate solutions than in other businesses. So if a company, this is a bit of a out there example, but Ostrid used to be an oil and gas company, and they fully divested all of their assets from oil and gas. They sold all of their oil rights, their platforms, etc. But they took their expertise in drilling and pipelines and are building offshore wind and piping hydrogen back. So they said, we are not going to be a fossil fuel company in the traditional way anymore. We're going to be an energy company. So that was a change they made. And they're not a US based company, and we can't currently invest in non-US based companies. But if we did, we would have gone from we can't invest in you to we will invest in you. So
See, but that's a good example, and I think more companies will have to do that. If you don't innovate, you die, right? So if you stick to fossil fuels too long and you wait for the ship, and then you don't have enough money to innovate, too late. So all right, we have another question from the audience from Energized Pixel, aka Elias. A really interesting part of your theory is to pressure the rest to decarbonize. Could you talk more about how you see that happening and why it's
yeah,
important?
this is a really interesting space. So publicly traded companies work as almost like little mini dictatorships for the most part, but they have a small amount of like democratic pressure on them. So mostly it's a CEO, and they make the decision. They make the decisions. But they also, publicly traded companies have to have a board, and all the shareholders get the right to vote on members of the board, direct some policies and directions, sometimes around compensation. You can use that vote to pressure a company to change.
Are you saying when you own a stock, there's votes and you can?
Yeah. So there's two ways. One is when you own a certain number of shares of a company for a certain period of time, you then can submit a shareholder resolution, which means literally you write up a bylaw for the company, and if it passes, then the company needs to adhere to it, right? Wow. And the other thing you can do is you can vote on existing policies. So if they're like, well, we want to increase executive pay, even though we've been, destroying more of the environment, you can say, nah, I'm not into that.
That makes a lot of sense.
And this is something that is rarely done by retail investors for a few reasons. One is there's a lot of shares of most of these companies. So what difference does it really make if you just vote? And like, are enough other people going to be voting in alignment with you to make a difference?
Yeah, and it's a lot of time, right? To understand all this stuff, and you spend $100 on a stock doesn't make sense. Like,
yeah,
you know, for you guys, it's your business. That's why it makes sense. ETFs in general make sense because of that fact, right? Like, you go to a source that's their main job is to figure out how to weight the stocks, like you're doing, right?
Mm-hmm.
Which ones are because some companies can do something in the middle of the year and now they're off the list. But if you're not watching that, you're just
right. You're behind.
Yeah.
So, like, most retail investors don't have the time to go read all of the, like, say you own 100 different stocks. That's not even that well diversified, but you know, it's a good chunk if you're picking individual tickers. They have at least quarterly meetings. So that's 400 meetings you have. It's already out there. So we're just launching our proxy voting, which means we can now we will very soon be able to vote for all of our members.
That's interesting. So you're saying if you buy an ETF through you, because you have the volume, you can make votes for everybody?
So in right now, it's going to be focused not on the ETFs, but on the individual stocks. So all the stocks in the climate index that we built, all the stocks in the consumer staples index. So in those two ones in particular, we have individual holdings, and we'll be able to coordinate everyone's vote to vote the same. So now it's not you voting alone, but you going, you know, I trust the Carbon Collective team and what they're about, and they're going to share their information and vote along these guidelines to help further sort of these environmental core tenets.
So so I understand. Go, finish.
No, so like now instead of being like I have to research all of these votes and I don't even know which ones are important or if they'll make a difference. Now I know that me and Carbon Collective and everyone else in Carbon Collective is going to be voting on the same issue in the same way.
So does that mean Carbon Collective buys enough shares so they have a say?
Not yet. So we do not yet submit shareholder resolutions. That's our next step. We've only been around for 6 months. 9 months. Sorry, 9 months now. And you have to hold a stock for, I think it's 2 years to be able to submit a shareholder resolution. So we're not even at the point.
How many shares normally does it take? Do you know?
Off the top of my head, I don't remember, and I don't want to mislead people, but it is, I think it's less than 1%, but we're still talking on a big company that could still be a tremendous amount. So when we,
especially like that, the Teslas of the world, that could be a lot of money.
Exactly.
So,
but there was an example recently, Engine One, which is I think a private equity fund. They recently coordinated the insertion of 2 board members onto ExxonMobil. They used their shares to make a resolution, and then they went to Vanguard, they went to BlackRock, they went to all these large firms, they went to Fidelity that have a lot of shares of these companies, and said, hey, this is important. This will be valuable to your shareholders to be not to divest from, like, to help move ExxonMobil to a post-oil company. And, you know, these 2 board members will help in that mission. And they were able to get 2 board members who were focused on environmental issues onto ExxonMobil's board. So this was like a big deal. Then they used that popularity to launch an ETF whose sole focus was around these kind of, I don't want to quite say hostile, but activism investing, where you're like, I'm taking the vote element of my shares and focusing on the vote element. And like, well, we don't imagine Carbon Collective is ever going to be buying ExxonMobil and changing the execs there. There are things of climate index companies that we want to see better. We want to see them doing more. We think that while they're the best in their class, that they could be transitioning faster, that they could have more transparency, that they could be doing essentially more than they are right now. And so while that is not where we are yet, that is our aspiration for the best way to pressure companies.
That makes a lot of sense. That's actually very cool to say. We believe these board members, they selected the board members and everything, and then they brought those board members to the table and they accepted those people.
Well, it was voted on. They were voted into that position. And so this is like, it's very opaque. There is a some, and that's why I say it's not particularly democratic, in that most people don't have a seat at the vote, and most people don't know what the process is like. But in corporate governments, there is mechanisms for publicly held companies. You are an owner. If you own the stock, you have a little bit of a vote there. And so if you can make that voice heard, you can change these companies that often seem faceless monoliths who are going to eat everything alive. And this is not, by the way, I'm focused on the environment. I care a lot I think this is a crisis. It affects all other elements of our life. But if you care about other things, and there's a lot of things that are worth caring about and fighting for in the world, you can use the same tools that I've described here for other issues. And those issues, like, we don't generally tout this as a main feature, but like, we don't invest in any private prisons. Like, that's profiting off of slave labor. We are not okay with that, right? Now, if that's your main focus, you can even do more in that space through how you vote and what policies, because those companies, like, just not holding those companies that they're generally in what are called REITs, so real estate investment vehicles, that hold, like, private prison companies, but like, there are suppliers to those companies that you could pressure. There are other entities around that company that you could also focus on. So if you want to be if you want to use your investments in a more activist way, there's a lot of space for whatever it is you care about.
So you're saying, like, there's ETFs for different types of things like that, or more about you understanding the company more?
If one of your entrepreneurial members wants to do what Carbon Collective is doing for something else, there is space. If you want to coordinate people who are not, all invested under one umbrella to do this, there is space. And if you want to just inform, like, the folks who happen to have a lot of money and investments to rethink how they're invested, there is space to make a difference there too.
That makes sense. So someone in the audience is asking, what are the core products? So Carbon Collective, what are the products you offer to the people?
So right now it's pretty slim. We offer two types of portfolios, which is our what we call our core portfolio, which is the low carbon economy, where the fossil fuel companies have been replaced with the climate index. That's our well-rounded, hey, boring as hell, I'm going to use this for my IRA, put my $6,000 a year in that, and slowly get to be, having a nest egg. And then we offer what we call our all green, which is only the climate index. So only the 114 companies currently, but that will change time. Only those companies plus green bonds. And we use green bonds because green bonds tend to be negatively correlated with the stock market, or at least not particularly well correlated with the stock market. So when the stocks are high, bonds tend to be lower, but when the stock market crashes, bonds tend to go up. And when you rebalance, you can kind of take advantage and smooth out these ups and downs somewhat. So even in that more focused, targeted, all green product, we keep some bonds in there to help make it a more rounded portfolio.
Got it. So basically, you have two. You said there's one where you replace the carbon with the index, and then the other one is what?
The other one's the all green. So that's just the climate index plus green bonds.
Got it. Okay.
And then in each of those, you move the lever of how much equity and how much bonds you have based off your risk tolerance. So if you're newly out of school, you don't have a ton of money, but you're going to have a long time for it to grow and to smooth out any dips or troughs, like, you're probably going to choose something that's more risky. But if you're just about to retire, if you're like, I've done it all, I'm about to retire, I need this money to actually be there and not like disappear with the coronavirus,
Sure.
then you're going to choose something that's more conservative.
That makes sense. So that's just like if you have a 401k, they say, do you want it to be aggressive or right? And aggressive is being more in companies that are a little more volatile, but can create bigger returns, right? That's basically the idea.
Yeah, it's not guaranteed, of course, but volatility has two sides to it, the up and the down.
Yeah.
So, and we don't work on timing the market, but I do highly recommend if you're tempted to time the market, instead do what's called dollar cost averaging, which is just put more money in. When it's low, when it's just consistently put money in. And that tends to outperform people who try to get clever with timing the market. Okay, here, just a quick diatribe real fast. People talk about the market like it exists in separation from humans and human decisions, but
it's human behavior, right?
Right. The market doesn't go down and we respond to it. We are responding to something, and that causes the market to decline. So it is a collective, it is in our collective zeitgeist that the market should go down at this point, and we all start selling. And it's because we all start selling that the market goes down. So it's not like you are timing. Often when people think about timing the market, they think of themselves as separate from the emotional and political and social dialogue of the time, but they're influenced by that very much. And so, I say, you're likely going to get caught up in those emotions.
Yes.
So
most people buy on the up, right? Most people buy when it's high because they're excited. Everybody's talking good about it. And then when it starts going down, people start selling it and it goes worse and worse, right? If you did the opposite.
Right. Or even more accurately, it is high because everyone is buying at the same time. They're all saying this is a good time to buy. And so they're all compete. It's an auction. Everyone starts competing with each other for the access to it.
That makes a lot of sense. Yeah, I've recently learned that, and it took a while to really understand the human behavior of those charts. And I'm not trying to time the market either, but like you said, you can literally see when the market is lower than normal. Like you can go in and just see, okay, today it's down by a lot. I'll buy now. And then you see, oh, it's up a lot. Today might not be a good day to buy. Or like you said, dollar cost average, put in no matter what and just don't think about it. That's another way of just making sure you're always in, I call it riding those waves. But you can see the waves and the human behavior, and you can say, it's a down wave right now. Today's a good day to buy.
I think probably meditation is important here. Like the ability to look at your own emotional state and be like, I'm feeling the need to sell right now, or I'm feeling the need to buy right now. I wonder what's going on. It probably helps a little bit in creating that separation needed to not make an impulse decision.
Definitely.
But the other thing that I do, which I found really valuable, is I acknowledge that I'm an impulsive person. Like I totally am buying when it's high and selling when it's low on a personal level, right? I don't think so. We need systems in place to protect us against our own behavior. So what I do is I have my retirement account, which automatically takes money out of my bank account, the same amount every month, every time. It goes into our well-diversified thing. I give myself a small budget. This is my entertainment budget.
Yes, I can lose it all if I need to. Yes.
And I put that little bit in my general investing. I call it my Robinhood account. It's not actually on Robinhood, but it's my I'm just going to play around with this. And that allows me to get that I want to be participating and excited and so forth. And it's probably not going to win. It's probably not going to be making money unless I forget about it because I'm doing other stuff and don't have time to be lose money entertaining myself. But as long as I keep those ideas separate, I can make sure that my wealth is I can grow some wealth for retirement and, participate in this thing that I feel drawn to participate in.
All right. So somebody controlling the private area, which we're in right now, is asking, is it letting companies know it's possible to change how they increase infertility or unhealthy choices impact nature? I guess what they're saying here is what you do about helping companies decarbonize. Are you saying that I guess what this person is saying is by doing that, you're basically letting them know how to become more healthy choices for investors?
So we are not a consulting firm. We can't go, there's 1,400 stocks represented in our portfolio. We can't go to every one of those companies and do a deep audit of what they should and shouldn't be doing. However, for all of our climate index companies, we are writing up our scorecards, our analysis of them, and we do give at least 3 recommendations for ways that we think that they should improve. Now, should they be doing more than this and other than this? They're the experts in their space. Every company can do certain things that are across the board good. You should reduce energy. You should, be electrifying, using renewable energy. Okay. Those are across the board going to be the same for all companies. But for whatever the company specializes in, that's where they can innovate and do more good. And I want to see every company using their special knowledge, whatever it is, whether it's Apple and their manufacturing expertise, or it's, a power company and their ability to put in high power transmission lines, or if it is a waste company and their ability to recapture methane, like whatever the major innovation you should be doing to reduce your carbon impact should be related to what your core business is. And I don't think we're the best company to say what their core competency is and how they should be innovating. However, we can tell them, hey, you guys should be looking at this. You guys should be thinking about this, and you should be reporting accurately back. And we're going to be watching you from now on. Sure. And we have our eye on you, and we want you to do better. Now,
it's the watchdog idea, right? You guys, you're going to be a watchdog and say, okay, if you reach these criteria, we'll include you in what we're doing, and that will benefit you and our investors, right?
Absolutely. And one of the things I want to throw out, because we were talking about how do we pressure companies, there's a soft power way that we are starting to see emerge, which we didn't anticipate, which is as we become, and what we're trying to do is become thought leaders in the space and have opinions like how we pressure companies to do better, which we aren't doing a ton of yet, but we're trying to do more. We got, in one case, I was on these forums and I was talking about the problems with this one company, and someone on that forum was like, this is a sort of on one of the investment groups, found, like, where a VC invested in us, and there's like a private Slack channel, and we were talking about this. And on that Slack channel, another investor was like, yo, I know one of the board members of this company. What are the 3 things you tell that company? Whisper in their ear. And I was like, right. Well, we just wrote this article. Here are the 3 things we think you should do. So by Carbon Collective participating in these conversations, we're starting to be in the room as people are saying, hey, what should we be doing? We don't actually know. And we're seeing a lot more of what can be done, so we can start making some of those recommendations in a less formal way. So that's the non-formal way of participating in the conversation.
That's really good, because probably most of them do not understand what to do. And if even through trickling in the information through VCs and just people who know each other, that's impact, right? Like if they do 1% better, you're making an impact. They may not reach your ETF yet, but they're getting there, hopefully, and we survived this crazy situation with climate change, because I just never understood the idea of profit over planet, and it's so crazy to me that we're still in that model, even though we see what we see, all these crazy things happening in the world, and it's still profit over planet.
Yeah, I think this comes back to looking at some of the history of the type of capitalism. In the US, if you criticize capitalism, you are quickly a commie and a bad guy. And so I'm going to be careful here. But if you look at the history of the particular type of capitalism that we participated in, which has its roots deeply in colonialism, which has its roots deeply in the extracting of wealth from others, and we have applied that to the environment, and we apply that to the people in the economy. So we can participate in an entrepreneurial, in a venture, in a form of capitalism that is enriching to everyone, or we could keep these models and mindsets and practices that are rooted in 18th century slavery and destruction and extraction of wealth. So the policies that much of our legal basis for companies is based off of were coming out of the innovation happening in England. And when I say innovation, these are legal innovations on what counts as property and how we protect
how to get free work out of people. Yeah, 100%. Of course you profit if you don't pay labor, right?
Yeah, exactly. So I'm look, if you want to go crazy out there for a second and talk about the kinds of things I imagine Carbon Collective doing in the next 10 or 20 years.
Yes, go.
I would love it if what we were offering went beyond just publicly traded companies, because I think that's very narrow. We're participating in that same type of capitalism and extraction to some degree, right?
Sure.
We're trying to do it better, but we're essentially we're doing more good, being less bad, but we haven't recreated the paradigm.
Sure.
The next step, can we participate earlier in companies, being companies that aren't traditionally funded because the return models of individuals can include the ethical element? Absolutely. We should very much be funding those. Can we create a company that is owned by the members ultimately? Can we get to a company?
Is that like a fund that funds earlier stage companies through?
Yeah. So can we have these private funds that fund early stage companies? Can Carbon Collective ultimately be a co-op? I don't know if it can or not, but could all the members of Carbon Collective own Carbon Collective?
Have you looked into crypto and the DAO idea, that kind of idea too?
Yeah, I think blockchain has a lot of interesting, like it's a way of making sort of distributed and transparent transactions happen. And I think there's a lot of I thought about it mostly in terms of on the private side, like the other problem when we're talking about why it's hard for individuals to invest in private companies is the time frame is so long. It's 10 years, right? For most VC-backed companies.
Yes.
And if you might need your money out before then. So
not liquid.
Can you tokenize sort of a private fund and give liquidity to, I know I'm using these fancy terms, liquidity, the ability to get your money back out to the retail investor.
So just in case you're listening, you don't understand what he just said. The idea is if you invest early into a company, let's say I was an early investor in Carbon Collective, I would have to say, here, take this money, and I don't expect anything back for the next 7 to 10 years on average. That's how it normally works in venture capital. What he's saying is, if I did that, could there be a way where if in year 3 I say, okay, I need the money back or whatever, 1,000 back of it, there's a way to do that, because right now there's not a way to do that in traditional VC. So that does make a lot of sense for the normal person, because that is scary.
Things happen. Your kid gets sick, needs to go to school. You lose your job because of a pandemic, and you need to pay rent, like whatever it is. And a VC firm is pretty insulated from it.
Sure. And they have come up with things like secondary markets in this equity crowdfunding area I've seen so far. But that's where I do believe crypto is kind of the future, because what you are doing when you do crypto is you are an early stage investor in a lot of these companies, right? You're paying for their startup fees. And there are some companies that get earlier stage, but the idea is it's liquid. You can put in when the company's worth 10 million and then it goes up to $1 billion, and then you can sell it. You don't have to wait till it hits 500 billion and then decide to go IPO for you to get your money.
Right. And there's some innovators in the blockchain space and cryptocurrency space that's looking at tying financial gains to environmental benchmarks. So like CO2, tons of CO2 removed. And when you do that, so like Nori is one of those companies. And that's NORI, like the seaweed wrap. But they're looking at that exact question. And so you can, in cryptocurrencies, because it's not a fiat money, and fiat monies are very well protected and tied to government institutions, you can issue one that is based off of a different set of metrics. And so it doesn't just have to be sort of baked into the traditional ideas of power and extortion. It can be a new
Yes. So do you see a world, because I know crypto hasn't reached the market cap level where ETFs can even, I saw Ethereum.
No, there are actually, there are ETFs around cryptocurrencies.
But not stuff like this yet, right? What you're saying, not yet.
Not for private companies for sure. But I think we'll see a lot of change, both in the regulation and in how it's used. And I think it's going to go beyond just Bitcoin essentially does nothing, right? You're solving very large prime numbers.
Okay, so what do you think about Bitcoin, its energy use? Because I've heard things where Bitcoiners are incentivized to find low to no carbon emission places to mine, because they'll actually use energy that was going to go wasted anyway, that was just going wasted. What do you feel about all of that?
So like what you're talking about in the renewable space is called curtailing. And so when you produce, the sun's shining and you have, way more energy production than capacity than you actually need, like all that electricity has to be used instantaneously. There's no storage. There's very little storage of electricity. So in energy markets, if you have extra, you have to put it somewhere, and they essentially short it into the ground. So you get what's called curtailment. So power isn't produced or isn't used. And so the price goes really cheap, particularly in unregulated, deregulated energy markets. Or if you can get a private contract with one of the renewable energy, you can use that curtailment, or you can use that really low price and mine more cheaply. However, there's limitations to that, because if Bitcoin is expensive enough, you just keep using it through the night. Like you're going to be mining nonstop because there's
Right.
still value in that. And you spent a ton of money on capital costs. And this is almost always the problem with the using of curtailed energy. People talk about using curtailed energy all the time. Use it to desalinate water, use it to create cement, use it for manufacturing. But to do any of those things, there's a large capital upfront cost. So if I pay $10,000 to build something, and then I'm going to make money back on that $10,000 every time I use it. And it's going to cost me some amount. If it costs me less than I'm making, I'm going to want to be running that as many hours as I possibly can
to catch up and
to be able to catch up and pay off.
It basically removes any benefit, basically.
It can quickly do that. So like we talk about those, and then you look in practice, and these operations are running 24/7. Now, I'm not strictly against Bitcoin operations. I know there's some people who are like this is a bad thing to do with society. I'm a little more tempered in the what is the right thing to do for society, like what people want to do. But it is an enormous amount of energy that we're using, and it's particularly mind-boggling to me that we could be doing something more useful with that computational power. And even like an Ethereum has more potential, like upsides in running applications and supporting businesses.
It uses less energy, right? Uses less energy.
And it uses less energy. So like we can't have models where we get more out of it than we are. Like if we have a fixed amount of energy that we can use as a society, the question is, are we getting a good deal, or are we getting screwed? And in my opinion, from Bitcoin, is we're getting screwed. We put 17% of the world's energy to work on maintaining a currency that has mostly served to enrich people who already have a lot of money. Not everyone. There are definitely breakaway cases. But when I think about what we could use 17% of the world's energy production on other than this, like there's some exciting things we could do. Everything from improving well-being of people who don't have as much access to clean energy, to using the computation power to be folding proteins and to be building cures to diseases. Like there are very useful things. Even
That's very true.
Yeah, sorry, I've been ranting here.
No, that's very true. It's very true. We do have other questions, but I definitely wanted to ask you, because one of the things I think about is, you said it, probably a lot of the natural energy that is possible to use is not being used, right? So companies like you're talking about are aiming to use more of that, and then maybe the 17% of Bitcoin becomes one. But Bitcoin may be a better use of money than our current structure, which nobody knows yet. But that's kind of what I hope happens, right? The idea of Bitcoin and blockchain turn into a better way for normal people to get wealth generation, right? But right now, because of the way we use energy and the way we're not capturing it as much as available, it is taking up a lot. But in a society where we're using energy that is given to us by the universe better, maybe it does make more sense, right? That's kind of how I see it.
Right. So in a world with energy abundance where it's really cheap, like using a small percentage of it for maintaining a currency isn't a crazy idea. But I think when we think about any type of money, when we think about any type of finance, we should stop thinking of it as money as this like immutable representation of like wealth, right? And think of it more as this is a tool that allows humanity to do something.
Sure. It's energy in itself, right?
What?
It's energy in itself.
Yeah.
Money. Yeah.
Exactly. And is the currencies that we're doing, and this is true for the US dollar as true as for the Bitcoin, it's like as a government, as a financial system, is the US currency doing more good than harm? Is it advancing human well-being in a meaningful way? And if it's not, then we should be reconsidering our like participate in our, we can't not participate in it, but like we should try to change the structures.
I've actually heard that argument, like, okay, so if you add up the banks, the military, how much energy does the dollar spend, right? How do you add that up? It's really tough.
Right. And let's be clear, the dollar is the de facto global currency because of our military presence. Like we use a lot of hard power in the world to maintain that oil is traded in the dollar,
Uh-huh.
and that that this currency will be stable because we will go to war over it.
Yes.
And not a popular
Yeah.
view, but there are people smarter than I that have studied this, and this is the
Yeah.
same conclusion they've come to.
Of
And
course.
so, like, I think that we need to take that into consideration when we think about the environmental impact of the currencies and the way of like governance that we currently have.
I agree. And I mean it's super interesting, and that's where I think all of this ties, right? Like the assets that you invest in should be towards a better future, because without a future, what good are assets, right?
Right.
So it's like, what you're doing is genius. I love the idea. What you were gonna say? Sorry, I cut you off.
Oh, I know. Just that investing is believing in a better future by definition. And we're just
100%.
changing the definition of what, or being more specific about what a better future looks like to us. Because when you get a loan for your house, you are saying that I'm going to make as much or more money in the next 30 years so that this will be a good investment. And the bank's like, yeah, he's going to have a job and be able to make more money and be able to pay all this off, right? So I can get today what I imagine wanting, like with future work.
Sure.
Well,
Sure.
if we can do that, like, why not just envision a house? Why not envision a world where there's, better more equitable employment, where there is cleaner energy, where we aren't, all choking on the soot of our own innovation? Like,
Yeah.
hey,
Exactly. I love it. And I think we have the perfect question to end on, actually. This is actually a question I normally end on, but good question. What would you tell everyone watching they can do to start making change right now? Definitely important to fight the idea that stocks and investing is just for the rich, already well versed. So what would you do? What would you give a person advice wise right now, whether starting or not? Maybe you already have a portfolio.
mm-hmm.
What's some good advice for someone sitting here during COVID? It's looked like it's getting worse. Things are, and climate change is being more and more apparent to us visually.
Mm-hmm.
What is some good advice?
So first thing I'd say is that we are really bad about making decisions every single day, again and again, and making the right decisions. Like, humans are not set up to do that. So whenever you can, create a system to do that work, to be the person you want to be. If that's financial, this is like set automatic deposits that is a fixed
Reoccurring
amount,
stuff. Yep.
reoccurring. If this is like, when it comes to sort of environmental things, there are big decisions you can make: where you live, what kind of work you do, that are easier to make because you make them once and then can continue doing them. Like, you continue doing them naturally. You change what your default behavior is. And like, I started running. I hate running, but I agreed to run with my dad every morning. And so we go out, we meet up, and we hold each other accountable, right?
Awesome.
But that's not saying I'm not strong enough alone to run. And I'm not strong enough alone to save money for retirement. And I'm not strong enough alone to solve the climate crisis. But if I make a couple decisions when I'm more lucid and when I have a little more self-control, where I invest, that I'm investing regularly, how I move around, my transportation, where I live, then how I get my energy, then I don't have to keep making them every day. I don't have to keep failing at making them and then hating myself when I fail to make them. And I think that you can apply that in so many aspects of your life.
That's really good. Yeah, humans are just not meant to do certain things. We're just not built that way. So if you can create structures that allow you to do it based on our already behavior, yeah, it makes a lot of sense. So again, I guess tell people where to find you, where to sign up or whatever.
Yeah. So our website's carboncollective.co. We just started social media pages. And if you want to give feedback on what we're doing, ask us additional questions. We love to we want to engage in the conversation and learn what other people are thinking, what they're curious, what they don't understand, what they do understand. This helps us make a product that's more useful for everyone. So like, we have a Carbon Collective on Facebook and Instagram. I know these things are, we're not yet on TikTok. We don't have cool viral videos of me dancing yet. But, if you are on those platforms and have ideas, thoughts, questions, hit us up. It'll be me or one of the 5 other people who work with me. Will be one of us responding and engaging, and we'll talk about those ideas and try to engage with you. So
awesome. Yeah, and the link is in the description already if you haven't seen that yet. Thanks again, James. Excellent interview. Love the idea. I myself want to get more into understanding the right type of stocks. I was lucky enough to buy Tesla early. I want to know what are the next Teslas. So yes, I will be one of your customers and looking forward to learning more about Carbon Collective and anybody else. Like you said, comment on their social media, comment here. LinkedIn, look for James on LinkedIn. It's another good place. And follow the Carbon Collective journey because it's your journey. The earth needs to survive, right?
And I'll throw out one more offer to anyone who's listening right now. If you're an aspiring entrepreneur and you're thinking about going down the venture route and you want to bounce that idea off me, hit me up on LinkedIn. Let's talk about it.
Awesome. I'm going to take you up on that for our Meta Bronx because, as half of Meta Bronx, we do help venture companies go venture backed. And equity crowdfunding is a new way that we're starting to go that route too. But venture capital is the way innovation is funded. It just is to this current model.
Yeah.
So it has to be that way. So definitely take James up on that. That's a big someone who has raised venture capital is willing to give you advice. That's like a very good thing. So thanks again, James. Thanks for anybody who watched. Please like this video, subscribe to the channel for more.
Absolutely.
Go sign up for carboncollective.co and have a good day. Thank you.
Awesome. Thank you, Miguel. Bye.
Bye.